All right, so this is the first presentation I'm doing on PowerPoint, so just bear with me. I'm gonna cut this video up, but this is the analysis for current week. This is being recorded on Sunday. Tomorrow is going to be Monday, which is November 17th, 2025. And kind of just to, it's going to be a lot of exercises, tape reading activities, and I'm going to be posting any setups that I see on Discord and Twitter. So, anyways, that's what I did. So I'm basically just giving some explanation as to why I called what I called in my Discord today, which I'll show you on Discord today, right here. You can see I've been a little bit more active recently, but just, I'm always talking in here. So I have about 60 members in this group right here, and they all, they love it. So anyways, this was today. So futures open. Study how indices will have easy liftoff into the previous weekly opening prices at 1800 mark. The Dixie, or the dollar, on the right side is trading to the daily fair value gap low. That I want to see if it acts as premium inversion and allows indices to trade higher to 67.88, and then on the Nasdaq 25,320 and 3/4. Considering all of this, Forex should in sympathy trading slightly, higher here, but slightly higher here. Not in my interest though, so not really looking at Forex. But here's the screen, and the whole point is you're supposed to kind of zoom. And so this was one screen that I had. I was looking at the euro daily, and then the British pound, and then also S&P daily, Nasdaq daily, and here's the Nasdaq right here, and then here's the S&P right here. So at that time I was watching a return into 67.88 and 25,320 and 3/4. And then here was the dollar, where I wanted to go up into there, and then ideally see it trade as inversion. Instead, it went out of zone. And wait, before I actually switch the screen, it went up above that zone. So that was that orange shaded area right here. And then just kind of visually kind of letting anyone know that this was the draw on liquidity and it's going to act as a magnet. So that was my main focus, that I believe that the next draw on liquidity was right here at this level. So eventually I provided some updates hour by hour. It was very slow, but eventually it booked, and that's that level right there, 67.88. And then Nasdaq is still pending, but just going into tomorrow, that provides me a little bit more confidence in going long. All right, so this was these screenshots were taken a little bit earlier in the day. This was on Saturday, and right now it's Sunday. So I was looking at these major lows on the ES right here, and comparing that side by side to the dollar. So ES is my main focus right now. I just prefer it more, simply because it's the tool that I've always stuck with and something that I know. But these two lows, if you look at the dates formed, this was a Friday, so this is Friday's trading, and then this is the previous Friday's trading. So we came all the way down here, a lot of range, expanded to the downside, and then came back up, and then fast forward, ignoring all of this, fast forward to this Friday, excuse that, fast forward to this Friday, and you see we came all the way down, failed to take out that low on the ES, but NASDAQ goes down and trades into that low. So we have a potential, I don't want to say SMT, qualify it as a SMT yet, but potential the SMT right there. So, right. And then if you take those same dates and compare it to the highs of the dollar index, right? Because we're looking at the kind of opposite or inverse view. Here is that high relative to this one on the ES. Here's that high relative to this one. And here is that high relative to this one. So what I'm looking at currently on this view, just to simplify things, is first thing I would just want to see, does it come up into there? And does it come down lower? Because I'm looking to see if we have any potential downside expansion. And this would then act as an inversion fair value gap. We have kind of a sell side pool right here. So I want to see it work down there. And then that would provide the means for any upside into this premium array. That's all I'm looking at right now. And then if we can get above this premium array, we have these equal highs right here. So not super equal, but there's a lot of liquidity resting above here. So here is the side-by-side ES and NQ. You can see that the ES dips, that the NQ dips lower on the left side. And so takes out that low, but fails to trade to the new week opening gap high, and then comes back up. So I think what's reasonable in the beginning portion of the week would just to be go up into this premium array right here. So that high of the fair value gap, and then that's the low. Same thing here, high and low. And anyways, back here, right? So not much here. I would draw the new week opening gap. All right, so a pretty small new week opening gap right here. And you can see that's essentially where, you know, that low is going to be that same thing, the weekly open. So I'm just looking at this right here, but you can see that initially right now, it looks like it wants to draw even lower back into the sell side. But this is on a 1 minute chart, so I would not discard a 1 minute chart for the daily time frame narrative of it coming back into here. So it coming down does not change the daily narrative. Basically, it coming down on a 1 minute chart right here, all the way here, even into these equal lows, does not change any narrative. And what I would do is I would just look at the largest gap from like a zoomed out perspective. And it's going to be that one right there. And that one right there. And I just see for it to act as inversion over here if it wants to support attacking these equal lows. And then I'd want to see it obviously come down here. But when it comes down here, does this gap provide sort of a resistance to the current market price when it's below or beneath here? And then it should kind of come here and then want to expand lower, especially to refill in this low. So like this low is sort of what I would be looking at as for it to fill in, but it doesn't have to, because we obviously have really, really nice equal lows down here. So that's just the full story. But the way this would be sort of said in my Discord for anyone new is I would just send out a little text saying 6770. And then I would say is next. And I would just do that. And I would keep it super simple. And if you understand the logic, you would mark this out on your chart and you would just watch these things. This is how you build confidence. I'm still warming up. It just feels a little strange to me marking and annotating my chart up again. And it's just, I want to warm up all my muscle memory before I even, start, I guess, becoming a little more aggressive. Anyways. All right. With that being said, the dollar index. And on the daily chart, where are we right now? So we're above that inversion gap. So what I'm thinking to myself is, if the dollar wants to trade higher, this is obvious, like a pretty good level for it to go up to. Now, it could trade up into these highs additionally. Sorry, for S&P, which I will talk about silver, hopefully. For S&P, let me hide this. There we go, clear things up a little bit. All right, S&P, I think we have room up here into the SIBI. So dollar goes higher, say, and ES goes higher, say. It's a matter of, does the dollar reject lower and then continue to send S&P higher using this as a bullish inversion fair value gap, and we can remove that, and that would leave buy side, about or it would leave the willingness for the market to want to at least go up into this midpoint of the wick. So 68.90, I'll say. And the reason is because this one came up and it retraced back down, and then we opened the next day, came all the way up, failed to trade to this high really, but failed to really even trade above the consequent encroachment or the halfway. And then we look at the reaction there. So it could, yes, trade up higher, but it also could trade higher and then just stop dead in its tracks right here, 68.90. So that's my only fear. But if it does trade higher, imbalance is my focus, and obviously I would then later in the week throw gradients from the high to the low and then measure its progression higher, right? So makes sense. Okay. NASDAQ right here. I just think the easiest way to put it is, I think we can go to the midpoint of this daily liquidity void, and then this imbalance is kind of next. It's already reaching up there, and if you're looking at it here and you're stern in your assessment or your analysis to say that it can go up into, let's just say, the midpoint of that imbalance, it would not be any benefit for you to go on a 1 minute chart and start to try and trade this thing right now, just because the time is not really in your favor right now. We're entering London, and it's just, you want to wait for more information, really. So that's what I think. Could the NASDAQ trade up here first, or could it come down for sell side down here? Not really sure. I'm going to just let some time pass, let things clear up, and then I'll come back tomorrow or Tuesday, and then I'll just give another update. So